Hey crypto friends, for those of you who are new to my channel, my name's Garrett and welcome to Altcoin Radar. In today's educational trading video, you guys are going to learn all about the various types of mistakes that you want to avoid while using the RSI trading indicator. Now, for those of you who are new to the channel, if you are interested in trading and would like to try out the same crypto exchange I've been using for the last 3 years, feel free to go ahead and check out MEXC with the link in the video description down below this video. I personally love this exchange for two big reasons. One, as you guys can clearly see, they've got some of the cheapest fees in the industry, so you get to keep more of your profits if you're trading the futures market. Now, in addition to that, if you're a huge altcoin nerd like me who loves to be able to buy all kinds of different small cap altcoins, they've got over 1,500 of them, and they're constantly adding new ones all the time as well, so that's nice as well. All right, guys, so before we actually get into this, or as many of you already probably know, the RSI indicator is a pretty powerful trading indicator, and it's widely used to gauge the momentum and potential overbought and oversold conditions of an asset. However, just like any trader, or just like any tool in a trader's toolbox, the RSI comes with its own set of pitfalls. Like I've been saying in a lot of my other videos that are like this, no single indicator is guaranteed, all right? So the first mistake that you want to avoid with the RSI is having an over-reliance on extreme RSI levels, okay? Here's the thing, all right? One of the common mistakes that traders make is placing too much emphasis on extreme RSI levels, typically the 70 level for overbought conditions and the 30 level for oversold conditions, all right? Now, for those of you who don't know what I'm talking about, the top line of the RSI here is the 70 level, and the bottom level is the 30 level, all right? So while these levels can indicate potential reversals that might happen, markets can remain overbought or oversold for extended periods of time during strong trends, okay? And relying solely on these levels without considering broader market sentiment can lead to premature trading decisions and potentially getting liquidated as well. So let me go ahead and show you an example of this specific mistake first, okay? So as we are looking at the RSI right here, you can clearly see we are way, I mean here, this spot right in here, we are way overbought here, okay? Now, your first decision might be, as you guys can see clearly here, we were right up here, okay? Now, your first thing that you might be thinking here is, okay, we're overbought, right? So that must mean it's probably going to reverse and start to head backwards. Well, at this point in time, you have to think about market sentiment. This is why you have to think about market sentiment when you are trading with indicators like the RSI. Because at this point in time, market sentiment was extremely strong. Therefore, like I was explaining earlier, it's going to stay in bullish territory or overbought territory for an extended period of time. And that's exactly what happened here. We ended up staying in this territory for, let's see here, from the October 24th all the way to November 13th. I mean, almost a whole month we stayed into this long territory here. And even still, we ended up staying in it, or we ended up, going even higher after that. So realistically here, the point I'm getting at is the RSI levels, they can remain in overbought or oversold territory for an extended period of time. Just because it goes up does not automatically mean that it's going to start going down right away, okay? So that is just one of the mistakes that you want to pay attention to with using the RSI indicator, okay? All right, so let me go ahead and delete this. Now, another mistake that you want to avoid is ignoring divergence, okay? RSI divergence basically occurs when the RSI trend differs from the price trend, and a lot of traders often overlook this valuable signal, typically missing out on potential trend reversals. So to mitigate this, you want to regularly check for divergence between the RSI and price action to identify possible shifts in overall momentum that might not be immediately visible, okay? Now, you can see that pretty much right here, okay? A good example of that is we can clearly see price ended up rising hardcore right up here, all right? But it's not showing that typically on the RSI here, all right? That is a good indication of what I'm talking about here. Now, the third mistake that I want to talk about here is neglecting trend analysis, okay? Here's the thing. The RSI indicator is most effective when used in conjunction with trend analysis, okay? Failing to consider the overall market trend can result in misinterpretation of the RSI signals, okay? So one thing to remember is that in an uptrend, pullbacks may not reach oversold levels, okay? They may not reach all the way down to that oversold level of, down here at the 30 level, okay? That's one thing that you really have to keep in mind, because I've seen a lot of people make that mistake in the past, okay? Now, and in a downtrend, rallies may not hit overbought levels either. They may not reach all the way to the oversold level or the overbought level at the 70 line, all right? Again, it's important to be cognizant of these facts, because this stuff can happen, and it does happen quite often, all right? Let me see if I can go back and find a good example of this, all right? Let's see here. All right, so here's a good example, all right? Let's see here, we'll go right up in here. Yeah, we'll go right up in here. All right, so back in here, you can see we were pretty high, and we were pretty high in the RSI, and we ended up shifting downwards and reversing down, okay? Now, a lot of people, they might, place their short order right in there, and they might hold on to it until it gets all the way down to the 30 level. But this is a perfect example of what I'm talking about here as far as neglecting trend analysis, okay? You cannot solely base your decisions solely based on these indicators, because as you guys can clearly see here, it did not reach all the way down to the 30 level. Instead, it only went down to roughly around 40, roughly around like 41, 42-ish, somewhere around there, all right? Which is just below the neutral level, all right? Which technically, at that point in time, it is oversold at that point in time, because it is over the neutral level, all right? So you have to keep these things in mind when you are trading, all right? There's all kinds of different things that you can see with these indicators if you look close enough, rather than just looking at the surface level type of shit, all right? Now, the next mistake, or the last mistake that I want to touch base on here, is impulsive trading on RSI level crosses, okay? Crosses of the 70 and 30 levels, which is obviously these lines I was talking about again, crosses of these 70 and 30 levels, or of the RSI and its signal line, can easily prompt impulsive trading, okay? But something to remember is a cross alone does not guarantee a reversal or a continuation. So because of this is why it is important to always confirm your bias with other indicators, price action, and overall market sentiment as well, all right? So just to give you an example of that, let's just go ahead and cross-check some of these instances with my Bollinger Bands here, okay? So, for instance, we will go ahead and use this as an example, okay? So, let's see here. We'll start right in here. All right, so as we can clearly see right in here, you guys, right in here, all right? So when we are using both the Bollinger Bands and the RSI, we can clearly see right in here that the RSI is way below the signal line, okay? But we were in oversold territory at that given time, okay? And we were starting to trend upwards from that oversold territory and cross over into neutral territory right here, all right? And you can clearly see that on the RSI as well. And this also shows the same thing right here in the what am I calling here, in the Bollinger Bands as well. You can clearly see price ended up crossing over, or like literally over, this middle moving average right here in the center, okay, which is this orange line in the center. Now, when that happens, that typically means, okay, we are starting to get bullish here, and things are starting to get bullish here, and things are starting to starting to peak up here, all right? And that's exactly what happened. And then the Bollinger Bands immediately started to open up like a crocodile's mouth, and we ended up rising pretty large there, all right? So that is pretty much what I'm talking about as far as, impulsive trading decisions, all right, based on crosses, okay? Now, overall here, you guys, as you navigate and as you use these indicators more, literally it's crucial to be aware of these common mistakes that I have mentioned in this video. I mean, it really is. And I know I'm not very good at kind of explaining some of these, simply because I talk really fast, because I like to get my point across, quickly. But I mean, it's very, very crucial to be aware of these types of common mistakes, all right? And by avoiding these mistakes and adopting a more in-depth approach to technical analysis and literally looking at the fine details of everything before you are entering a trade, I mean, honestly, you can literally harness the power of the RSI indicator a lot more effectively. So remember, something to remember here, trading is an absolute artwork, okay? It's an art that requires continuous learning, literally learning all the time. There's still shit that I'm still learning on a regular basis, guys. Never be too scared to continue learning, okay? But anyway, it requires continuous learning, so be sure to stay vigilant at all times and stay disciplined while you're doing your technical analysis and trading in general, guys. All right. Now, if any of you guys have any questions about anything that I mentioned in this video that's related to altcoins or trading in general, feel free to go ahead and reach out to me in my free community Discord server, which you can find a link to in the description below this video as well. But overall here, you guys, that's going to pretty much do it for this video. So I will go ahead and wrap this video up. But before you guys leave, if you haven't already, go ahead and make sure to subscribe to my channel so that you never miss a new crypto and altcoin video from me on a regular basis. And hey guys, with that said, thanks again for watching.